If you're feeling totally overwhelmed about how to handle taxes as an online shop owner, I'm about to break it down for you in plain English. Hey, I'm Janet LeBlanc from Paper and Spark, and I help makers and artists just like you start and scale online shops so that you can achieve your entrepreneurial dreams and hit your financial goals with ease. Make sure you stick around to the end so that you can see that this topic really isn't as confusing as you think it is, I promise. Lots of online sellers and e-commerce shop owners feel overwhelmed or confused about exactly how to deal with taxes for their business. So you're not alone if you feel that way. You might even wonder if you even are a business or if you have to deal with taxes for your shop at all. There's a lot of misinformation out there, plain wrong or confusing info floating around the internet on this topic. So as an experienced accountant myself and as an actual e-commerce seller myself, I'm here to set the record straight for you and share step-by-step how to file taxes for your online shop. Now, disclaimer, I am located in the United States, so everything that I'm going to be chatting about today is geared towards US sellers. First, let's discuss who even needs to file taxes. The Internal Revenue Service, or the IRS, wants you to claim your shop sales regardless of how much or how little money you're making. So the first important thing to understand is that you should expect to report your sales for tax purposes on your tax form somewhere, no matter how your shop did this year. Contrary to popular belief, there's not a minimum threshold when it comes to having to report your sales. That being said, I also want you to understand that you don't actually pay income taxes on your sales. You pay income tax on your profit. That's a big difference. Your profit means your business sales minus your deductible business expenses. Second, let's get clear on what form or report you will be putting this information on at tax time. For about 95% of online shop owners watching this, that form will be the Schedule C. It's a 2-page form that goes with your personal tax form, your personal tax form 1040. At income tax time. You're going to be using the Schedule C if your business is considered a sole proprietorship, meaning there's only one of you running it and you haven't incorporated your business. If you've registered for your LLC and you aren't a partnership or elected to be taxed as an S corporation, you're also going to be taxed as a sole prop at tax time, and you will also be filling out that Schedule C form. Next, understand how your business is taxed. If you're a sole proprietor filling out that Schedule C, your business income is actually reported with your personal taxes. It's not something that's filed separately or has different due dates. Instead, you include that Schedule C form with your regular tax return, your personal Form 1040, and it's all going to be due on April 15th or around that time. Sometimes the date changes year to year based on federal holidays. So your business is part of your personal stuff. It's not taxed by itself in a vacuum, which is something that a lot of us get confused by. I encourage you to Google that Schedule C PDF. It's 2 pages. Google the form, look up the instructions. They're more helpful than you think. It's less complicated than you think once you actually look at it. I'm going to link to it in the description of the video. Let's walk through the form. Here's the top of the form. This is the area where you will enter some general information about your business, like your name, your address, and accounting method. You'll also have the option to file under your social security number or your EIN that you can receive for free from the IRS. Part 1 is where you report all of your business sales for the year. Your sales should include any shipping paid to you from your customers as part of your revenue. Notice that you don't break out your sales or your revenue by source or anything like that. It's just one lump sum for the year. You also can deduct refunds here, and your cost of goods sold deduction will travel over to this section from Part 3, which we'll talk about in a second. If you're finding this explanation helpful so far, please like this video and let me know. Next is Part 2, where you report your expenses or your business deductions. This part is very important. It's where you get to claim all of your deductions, otherwise known as a fancy tax word for your business expenses. This is why having a good bookkeeping system and keeping up with it throughout the year is so important. If you aren't recording those expenses throughout the year, you lose out on lowering your revenue, which means you will pay a lot more in taxes come April 15th. So get familiar with this section so you know what types of expenses you get to deduct for your business at the end of the year so that you can track them month to month throughout the year. Some common expense categories for online sellers are things like advertising, commissions and fees, legal and professional services, office expenses, supplies, and the other expenses line. Remember, logging these expenses throughout the year really helps. Generally, any business purchase that's considered ordinary and necessary in the course of running your shop can be deducted on this form. It doesn't really usually matter if you're funding it from a personal account or a business bank account. If it's ordinary and necessary in the course of running your business, you usually are able to deduct it here. If you have to catch up on an entire year's worth of bookkeeping at tax time, you will likely forget some of those old expenses and miss out on these valuable deductions. So make sure you check out my video on the no-brainer bookkeeping system for e-commerce sellers so that you can have a good, easy-to-use system to support you. Part 3 is where we figure out inventory and cost of goods sold for physical product sellers. This is usually the most confusing part of the Schedule C, the area where you calculate the cost of goods sold deduction. Like I said, if you sell physical products and you keep them in stock, you usually have to fill out this area of the form. If you're a digital product seller or a service provider, you may not need to, so lucky for you. Beginning inventory is either 0 for your first year of business, or it should roll over from last year's Schedule C ending inventory. Purchases are what you paid for items that you intend to resell, less the cost of anything you took out of your business for personal or non-business use. Materials and supplies are usually all of the inventoriable raw materials and supplies that go into the goods you create, and your inventory at year end should be the cost of all unsold finished goods and inventoriable raw materials and supplies still sitting on your shelf on the last day of your taxable year, which for many of us is December 31st. You then do the math after entering all these things here to back into your cost of goods sold deduction, and that's what you actually get to deduct this year. If you just want the concept of what you're actually doing here, think of cost of goods sold as the amount you spent on your inventory that went into the finished goods you actually sold this year. That's the amount you get to deduct, which you used and sold this year, even if you bought it in a prior year. That deduction travels back over to part 1 of the Schedule C. Let's check out the bottom of page 1. Even though it's at the bottom of the first page, this is actually the final part of your form where everything that you've done on the other sections is summed up and then subtracted. So your business total net profit or loss will be calculated here. If you end up with a profit here, it will travel to some other areas of your tax forms. It'll go to the Schedule SE, self-employment tax, where you will calculate your self-employment tax. It will also travel to your personal Form 1040, where it'll be added to any other income you or a spouse that you may be filing jointly with will be reporting. So remember, the income tax you owe will be determined by your total income situation. You might have personal stuff to report. You may be filing with a spouse who also has income to report. We have to look at that whole big picture to figure out how much income tax you owe. It's not just what's going on in your business. If you have a loss here on the Schedule C, that same concept applies. It will actually reduce other income that you and or your spouse are reporting on your Form 1040, so it can potentially even lower your tax bill. That step-by-step is an explanation of how to walk through your Schedule C so that you can fill it out at tax time for your online shop. If you have questions about this process, let me know in the comments. After seeing this form, if you're not quite sure what numbers you need to actually report on it for the year, if you don't have your bookkeeping totals yet for the year compiled nicely, then I encourage you to watch my video about Paper and Spark spreadsheets, the no-brainer bookkeeping system for e-commerce sellers right here. They're designed to make tax time easy peasy for you.